Some positive signs are popping up in Phoenix, good job growth and improving occupancy rates, but still some concerning signs too. Not much rent growth, lots of single-family home sales, and are we about to see a rebound in apartment construction? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Phoenix update. Jobs, this is certainly good to see in Phoenix. Consistently solid growth over the past 2 years. Not back to the huge levels that we saw in the mid-2000s, but still very healthy gains. Another 41,500 jobs added in the year ending February of 2013. 10th best absolute gain in the country and expanding the metro's employment base 2.4%. And what's been good to see is the job growth has been widespread across different employment sectors. We've even seen a rebound in construction jobs, which were of course hard hit in the recession, but have always been a key factor here. And we'll talk more about where those newly hired construction workers are going in a little bit here. And let's talk about how those improved job growth numbers are translating to apartment demand. This shows you quarterly apartment demand over the past 2 years, and you can see it's been a roller coaster. Huge demand in one quarter, only to be followed by weak or even negative demand in the next. The good news is that the good quarters tend to more than outweigh the bad quarters, so the annualized numbers produce a smoother line. But this bumpiness provides some evidence that it's still very much a rocky recovery in Phoenix. Single-family home sales and rentals have just exploded here in the past couple of years, and so much of the newly created housing demand is going that way. Lots of investor interest in single-family homes in Phoenix, and they've added a lot of homes in the rental pool. So as a result, even though annual demand numbers have been positive, they certainly are not overwhelming. So as a result, occupancy is trending upward, but at a slowing pace. Occupancy up 70 basis points to 93.4%, a 6-year high. Now that's great to see, but unfortunately that does trace more to slow new supply volumes than it does to strong demand. New supply levels are still hovering around the lowest level seen in 2 decades. But how long will that last, and are we beginning to see a rebound in apartment construction? We've seen this happening all across the country, but so far, housing bubble markets like Phoenix have been the exception. But take a look at this chart showing apartment construction by quarter. The construction volume jumped from 4,800 units in Q4 of 2012 to nearly 7,500 units in Q1 of 2013, and that is Phoenix's biggest construction volume since 2009. So what happened is we saw a spurt of new starts in Q1. 10 projects totaling 3,000 units broke ground just in first quarter, and all 10 are conventional apartment properties. So we'll have to see if this trend continues into 2013 or if this was just a blip. If we do see starts continue to climb, that could be a worrisome sign given that apartment fundamentals here are still very much in recovery. The key example here is that rents in Phoenix are still 6% below pre-recession levels. That's one of the biggest deficits anywhere in the country, and most markets, by the way, have already recovered all the rent cuts from the recession. They're at new highs in average monthly rental rates. And in Phoenix, prices are just not bouncing back very quickly. Rents climbed just 1.8% year over year as of Q1, and even the spots with better occupancy rates, rent growth has been very limited. Now, here are the 6 submarkets with the most apartment construction as of Q1, mostly eastern suburbs, and you can see generally better occupancy rates in these spots, but very little rent growth. Only South Scottsdale from this list produced decent rent growth in the past year, but rent growth numbers even there have fluctuated quite a bit over the past couple of years. So the point is, if that construction continues to pick up in these spots, we could continue to see limited rent growth even in the best submarkets. Of course, the other big factor to continue to watch is the loss of apartment renters to single-family purchase or single-family rental. Until the single-family market stabilizes, apartment demand may continue to fluctuate. And for these reasons, we expect occupancy growth in Phoenix to slow down over the next year and for rents to climb around 2.5% annually. And that wraps us up for Phoenix. So until next time, for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.